Ben and I are going to be going over our trade reviews. Mine was on NVIDIA and Square, and I like to call this setup the dip and rip setup. What tends to happen is the stock sells off within the first 5 to 10 minutes, bottoms out, and then pushes up with an increase in volume. So some variables in my favor that I utilize are the VWAP, which is the volume weighted average price, and the moving averages, the exponential moving average. But like I said, this setup happens within the first 5 to 10 minutes, so I don't have too much data on the indicators, the technical indicators. So I mostly look at level 2 and volume. So what I mean by the setup is the stock sells off and I see that the buyers are interested at, I like to look at psychological whole and half dollar numbers. This is just a theatrical example. Let's say Square is at 250 and it sells off to 249.50 and the buyers step in at 249.50 and it can't break below 249.50. I will start my position at that whole number, at that 50 mark on 249, once I see that the buyers are holding that level. So I like to use these whole and half numbers as psychological supports and or resistances. It just depends on how much conviction I have on the trade. And then I like to see the volume. So the volume has to be increasing. If there's about to be a breakout on a stock and there's no volume, I'm going to think about it twice and hesitate, because that is critical for breakouts. You need volume coming in. So that's the amount of transactions being taken place within a specific time period. So if I see a lot of volume coming in, a lot of interest in a stock on a breakout, that will give me conviction. We're going to get on the charts and let's get into it.
What's going on, everyone? It's Ben here from the Intraday Investors, and today Troy and I are going to be talking about a couple of trades that we took over this past week. Mine being on February 10th, it was a Tesla trade I took. It was an 831 low of day short trade. And a couple things that I was looking for throughout the trade and trying to understand were the level 2. That being where the buyers and sellers are at a specific price on the stock. And that's going to help us determine whether we're going to want to get long or short at a specific price. And then we've got the VWAP. That's a volume weighted average price. So it's going to tell us the average price based on the volume throughout the day. And if the stock is trading underneath the VWAP, it can make for a good short setup. And if it's trading above VWAP, we can go long. And then we're going to also look at the volume candles. Normally when we're looking at consolidation breakouts, the volume tends to be smaller when it's consolidating, and then breaks and gets higher when we break the level. So we'll get to the chart on that, and then after that, Troy will talk about his trades. Troy and I were talking about our trades earlier in the YouTube video we're making, and this was my trade that I took on Wednesday, just this last Wednesday on the 10th. I was trading Tesla on the 5-minute chart. So each candlestick represents 5 minutes of price action. So in this specific trade, I'm looking at it on just dumping under VWAP here pretty much. So when the SPY opens, this is the same day as Tesla. So when the SPY opens, we're already going lower, and Tesla's doing the same thing. Now Tesla's in the S&P 500, so it's gonna move with the overall SPY and how it affects with that market. So when SPY moves, Tesla will move with it most of the time. Sometimes crazy news hits and Tesla just goes whack for no reason. But in this case, SPY is trending under VWAP for the entire day. I mean, it wicks up above one time, and Tesla wicks above more. It's more volatile of a stock. The IV on the options can get high most of the time, and it's going to be a volatile stock, especially when VIX is high too. So when the SPY is dumping, Tesla's dumping, and then SPY bounces at this 391 price level, and then Tesla also flattens out pretty much around the same time. So Tesla flattened out, and then it came up to 835 on this candle. So at that time I'm thinking, okay, so there's going to be a trade here either way. It's either going to consolidate under VWAP again with what the SPY is doing.
Yeah, so basically, because SPY trades hand in hand with Tesla, we never like to solely rely on it, but you can expect when the overall market's pulling back, you can expect the stocks that we're trading are going to pull back with them.
Yeah.
So this gave you more conviction in your trade, especially when the SPY is pulling back.
Yeah. So once it bounces here with the SPY, and the SPY starts to bounce towards VWAP, like I said, there's two trades you could take here. You could wait for it to reject again and get short of VWAP, or you can wait for the candle to close above VWAP and then potentially take a long. As long as the SPY does the same thing. We want to be taking trades with the SPY when we're doing Tesla. But it does the opposite, and SPY retests that 391.36 level, and Tesla retests the same price, and that just dumps. And that's where I bought the E30 puts.
So tell me a little bit about the psychology behind you getting into a position. Like you have to think like your position size is how much are you putting up on the trade.
Right.
So
right.
you had your contracts
were
were
$1,450 each, so I had 2,900.
2,900 your position size.
Yeah, that's a position
so
size.
what are you willing to risk? Because you have to identify your risk / reward ratio.
Yeah. So normally, like, it's not necessarily like sometimes it's a dollar amount, but like I could just be risking above you up here.
So do you do like an arbitrary stop, or do you do like a mental like what do you like? Because like a lot of people look at the chart and they'll stop out based on how the chart's performing. So if it started to reverse on you and break above the like this candle right here.
I know what you mean.
So like this candle right here.
Yeah.
If you got in right here and it started to, would your stop be like behind or above this candle?
Yeah.
Showing you reversal,
yeah.
or do you have like a mental stop?
No. So like for this specific type of trade, I always have a stop above VWAP, like a hard stop above VWAP.
So you're putting on $400 or $500 of risk.
Yeah.
Okay.
So we want to just be risking above VWAP here, because if it breaks above VWAP and holds above VWAP, that's going to be like a change of direction.
Yes.
We're going to see a change in the way the stock is moving.
So basically, the purple line in the middle is the volume weighted average price. So when the candles are below it, that is showing you weakness, and when the candles are above it, showing you strength. But ultimately, every time it comes back to the VWAP, it rejects it and can't break it and pulls back, even confirming it that that's a solid resistance. Because when the candles are below the VWAP, it acts as a resistance. And vice versa. When they're above it, it acts as a support.
Yeah. So typically, like for this trade, I entered when it broke because the SPY also did the same thing. So like I've been reiterating this like the entire time. When we're trading Tesla or a big stock like this, a big name stock that's in the S&P 500, we want to watch the SPY, because the SPY is going to ultimately control where it goes, or Tesla is going to follow it essentially. Right. So, and then so we started to dip here, and then as you can see, I just wanted to go over this real quick too, the volume. So while the stock is dumping, it's on low volume, and then when it starts to consolidate again in this time frame, the volume is really low. Yeah. So we want the volume to be low, especially when it's consolidating, because it means it's going to tighten up. More people might buy it, and then when we go to dump that price at the same time SPY does, the volume starts to pick up.
Can you explain a little bit about what consolidation is?
Yeah, so consolidation on like this specific chart, this is like a bit more of a longer time frame if we're looking at
so each candle represents 5 minutes worth of trading.
Like if we look at a 1 minute chart, it would probably be a little bit tighter, but consolidation is basically like a little just area of price action where the stock is in between two specific points.
Yeah, so they can't find direction. Yeah. Is it, buying? Are you going to go long or short on it?
Yeah.
You can't really tell. Cause
it's basically a fight between buyers and sellers.
Yeah, it's like tug of war. Look at it like a match of tug of war. And like sometimes you're winning, sometimes you're losing, but ultimately you can't find that direction. So once it breaks out of that consolidation on the upside or downside, you want to be ready to hesitate, to execute, to get into the position. Because you don't want to miss a play like this. This is a really good short opportunity.
Yeah. So in this like specific scenario, obviously you don't want to miss that. But in this like specific scenario,
what if you did miss it? Well, so if let's say you did miss
psychology aspect of it.
Well, basically, like say you did miss it and you didn't want to chase it and you wanted to buy on the pullback. Like, what is a variable you can tell them to
buy on the dip, basically?
Yeah, pullback. I'm going to be getting into my dip and rip setup after this, but I'm talking about in this specific scenario, what would be a nice pullback entry?
Yeah, so a pullback entry. So like in this specific situation, Tesla kind of flushed right through. So it got under 830 and then flushed like straight to 828. So in like that situation, it's hard to enter because it's dumping so hard. But what I would do is I would just wait for the SPY to just bounce, especially like at this level. When we get the first when we get a initial not crash, but like a flush down, really strong, like sellers are coming in, we're moving really quickly. As soon as you see that first green 1 minute candle starting to form, or 5 minute candle, that's always a good place to buy, because it could just mean for a potential short term buy.
Yeah.
And so in this trade, you could have bought it down here, or at 820 where the candle closes, and then you get a quick scalp up to like 823, 824 with this candle. So you can even if you miss the short side trade, there's always going to be an opportunity to buy it up to, especially if the stock is dumping so quickly.
Yeah.
So Yeah, and this one I only took the short trade because I got in up here.
That was a good one.
When the SPY started to bounce with it, that's when I knew I should.
I like
sell my
like
contract.
another good play. If I was going long, which means that I'm buying in hopes that the stock rises in value as opposed to decreasing. A good entry is you can see that we're making higher lows. It's selling off. It's obvious that it's weak. But where do we bounce at? Well, we bounce right at that 800 psychological hold number, which acts to tend as a support. Especially, that's a significant level on Tesla, 800. So what you could have done is you could have seen, if you're looking at the level 2 and you've seen, because if you see buyers on the bid, proving that that's a support, people are buying it on the level 2 side, on the bid side at 800. You could have got in at 800 and had your stop loss below 800, and then cutting your losses if it broke below 8. You see what I'm saying?
Yeah.
If you're playing it on the long side, you can see it bounce right here at 800. You would have had your stop loss right here under 800, say like 799.90, because I'm very conservative. I have a tight stop loss. So my stop loss would have been, a couple 10, 20 cents below that significant level, because I know like this is going to hold if the buyers can hold it up, because it's that hold number. And that's exactly what happened. It bounced, and then it came back to retest that VWAP, which it ended up consolidating below it, showing you that it can't break above the midpoint of the stock.
Pretty much after this, the rest of the day, Tesla was like kind of flat. Now, and then you can see the decreasing volume when we get into VWAP and how it's just going down and down and down and down.
So that's a time when you don't really want to
you don't want to be in a trade.
You don't want to be in a trade like that. Yeah.
These are setups where these are patterns that we see all the time.
You can see they happen earlier in the day.
Yeah.
Your setup happened right at 10 a.m.
Yep.
So 10 a.m. I stopped trading at about 10:30, 11 p.m. or 11 a.m. because there's no more volume. Like I'm not saying there's not opportunities, but I'm not gonna be in stocks that aren't in play. And if the volume's not there, it doesn't make sense to be in it.
Right.
So that was a good one.
Yeah, it was definitely a sick trade. As you can see here, I took this one off at the bottom when we did bounce.
So you had two put options.
Yeah, 2 options. Yeah.
And then you scaled one off.
Yeah. So like I said, it was rapidly dropping, and it was taking out bids at every price. And so when I was watching, go ahead.
And you're playing weeklies. You're playing this Friday expires.
Yeah. So it was Friday the 12th would have been the expiry day for them. So when I was watching the level 2, it was dropping really, really quickly, violently. You could watch the bids getting eaten up, and it was just dropping so fast. So I figured a bounce was potentially coming because it was dropping so quickly, and eventually there was going to be a seller that came in.
Right.
So I just scaled one off, and I got that one off at 20.54, and then this is when I got my last contract off when it bottomed out, and it made the short-term bottom. Same with SPY, so I sold that there. And then you could have always re-entered.
Yeah.
Under here too, and the low. There's multiple Tesla, especially when Tesla's trending. There are so many different moves you could take on it.
Tesla, I think Tesla's due for a sell-off. You know, it's a little bit overextended, especially that there's other competitors. There's other people getting in an electric vehicle game. Why Tesla? I mean, I know Elon Musk is the CEO, and he's a great guy, and what he does, everything. He's got a bunch of businesses. Do you think that everything he does, like Neuralink and the Boring Company, all those companies, SpaceX and etc., do you think that all correlates with Tesla's price? I know Tesla.
No, I don't think so.
You don't think so?
Maybe mentally, or a brand, I'm gonna buy Tesla stock because it's owned by Elon Musk.
I like how like a brand,
Yeah, because it's owned by Elon Musk. You know what I mean?
Yeah.
Or Elon Musk owns SpaceX. He also owns Tesla. So I'm gonna buy Tesla stock because I like SpaceX and I like to support Elon Musk. Yeah. You know what I mean?
Absolutely.
So I think a lot of the valuation of that company comes from that, and also how electric vehicles are gonna be huge. Yeah. I mean, eventually gas vehicles are just gonna be irrelevant.
Teslas are nice. I really do. I really like the car.
Mm-hmm. Do you want to talk about your trades?
Yeah, I'll talk about
your word. On Boeing and video, right? Yeah. Oh my good now.
Tight consolidation. Alright. So I like how you had it. This is a nice journal. So we like to journal our trades, like you see right here to the right. Right here, we're going to be talking about my trades. We'll start with NVIDIA. Did you take this trade with me? On the 8th?
Maybe.
It was the 8th. So we have the 5-minute...
Let's look at the chart.
So we can look at let's look at SPY in the 8th too. Right here is the 8th.
Yeah.
So you can see down here we have the time, we have the date. So we're going to go back to the 8th. And right here in this left chart is the S&P 500. This chart in the middle top, we have the 5-minute chart on NVIDIA. And then we have the 1-minute chart on NVIDIA down here. So I like to have the 5-minute and the 1-minute right next to each other. I like to trade them hand to hand.
Yep.
You see that's some good price action. There's a lot of, I'll show you some good entry points in there. And then I like to have the daily chart. So let me delete this. You can see all-time highs. They're about right there. All right, so the dip and rip strategy, this didn't have, the NVIDIA wasn't the dip and rip strategy. That was Square. So we'll start with NVIDIA though, and my reasoning behind it. It was a pretty solid price action throughout the day. Can you see that? Like the whole day, the candles were trending above the volume weighted average price, which is this purple line in the middle.
Yep.
And like I said, when the candles are above the middle VWAP, the purple line, that's showing you strength. When the candles are below, like your Tesla example,
yep,
is showing you weakness. So, and like I said, when the candles are above the volume weighted average price, it tends to act as a support. You can see the candles pull back, a little bit of price action, bounces right in the VWAP. You know, but it's pulling back higher, so that's pretty good.
It makes higher highs throughout the day, pretty much.
Yeah. So let's hold up Square. So the entry, where does the entry look like to you? This is pretty solid price action, and this is
the 5-minute chart.
So we're looking at the 5-minute chart right here. You can see I got in a little bit later in the day.
Yeah.
I actually didn't take this right off the get-go. I got in right here on this second pullback. And after like the second and third pullback, it's the stock. I don't like to like get in any more pullbacks because like people get disinterested. People get away from their charts.
Right.
No one's watching the stock as you can expect earlier in the day. So sense. You can see we have the higher low. Let me change this. We have the higher low on the candle right here, and we have a higher high. So that's a pretty solid price action right there. And I missed the entry in the beginning. I've been having a lot of problems getting into positions with TD Ameritrade between execution and just so much volatility. The entry was right here. You can see we have the first 5-minute candle to make a new high. It breaks above my 9-day EMA. And I was going to hold it to test this level at 570. I know 570 is a whole number, so it acts as a resistance. But I had no reason to sell. As you can see, the level 2, I have, where's level 2? We'll pull up the level 2 down here. So I had the level 2 below it. So I seen this volume, look at this increase in volume right here, just like randomly, like what was that, 1150, just midday, you see that? So I didn't sell at that resistance. It blew right past that, and I'm going to hold it. But I ended up selling it to strength for a nice profit. It was a nice move on it, especially for missing it earlier in the day. I missed this pullback, and then I was like, okay, on the next pullback, because I like to buy on the first or second pullback. Because after, like I said, after the second pullback, people get disinterested. People are moving on to other opportunities. And, you know, a lot of traders stop trading by, noon. So that's what I'm saying is the most price action happens within the first 30 minutes, could you say?
Well, no, I would say like even after 10 a.m. Like a lot of good trades we find after 10 a.m. even until like 11 o'clock. Yeah. Most of the time. Like
around like lunchtime, I feel like it slows down a little bit.
After 11:30, the market slows down. For sure. And then it picks up again like mid-afternoon.
So if you guys can see this, let me just get this pattern up again. This is clean price action.
Especially in a stock like NVIDIA where the price action can be choppy sometimes on low volume. So like a day like on Monday was really good to trade it because the volume was elevated.
Right. So you can see that, look at all this volume coming in. It pushes up. And there's not really, look at all these wicks. There's not like clean price actions. If you would have got right here, that would have been a good entry right here.
You could have got into
on the 1 minute.
Right at the 5 minute at the open. As soon as it breaks that high.
Yes. like I said,
because it's above, yes, the
I've been
previous
having
high,
problems getting filled. Oh, I gotta go back to the 8th. I've been having problems getting filled really early, with all the volatility going on. But you can see the first pullback, and then I was ready for the second pullback. We have a higher low, higher high. We have an uptrend. We're above all my indicators, the 9-day EMA, the VWAP, and this is the first 5-minute candle to make a new high. I mean, it did right here a little bit, and it got rejected, but I needed to consolidate a little bit more. There wasn't too much consolidation, and then I gave it a chance on this second pullback. Boom. That was a pretty good trade. I was happy with that. And Square, which is dip and rip setup, this was also on the 8th. It's been doing this, so I'll show you a trend. This is the last 5 days of Square, and I'll show you this is a trend that it's been showing. It would dip the first 5-10 minutes and then rip. So you can go today, or what was it, Friday, dipped and then ripped.
Yep.
Thursday, dipped, then ripped. You can see that first 5-minute candle, dipped, then ripped.
Yep.
The day before, dipped, then ripped. This day right here, dipped and ripped. And today, the day I traded it, didn't really do that. But I'm showing you that if you can identify these trends, this would make for a good dip and rip trade. In the first 5-10 minutes.
Yeah, definitely. Especially if it's like, if you see it bouncing at like VWAP or bouncing at, see how like pre-market, that red candle?
Right here?
I mean, that's like, that might be a weird wick, but it does bounce exactly at the EMA.
Yeah.
So you can at least guide that as some kind of support zone, so that if it does come down there initially within the first 5 minutes, you can definitely buy it.
These indicators, and that's a SMA, and that's a 200-day EMA. So they act as supports.
Yeah.
The trade here was, again, another psychological whole number, 252. So if you bring it up, my trend line all the way over, we have, oops, let's see, let me get rid of that. How you feeling, man?
Good.
252, we have the break right here. We have these 5-minute candles. Every time it pushes up, it sells off, pushes up, sells off, pushes up, sells off at that 252 psychological whole number. I seen that there were sellers on the tape showing me that people are going to sell the stock at 252. But once it blew past 252, that gave me conviction that, okay, the people are interested in this. So I can draw my arrow. I entered on the break of that resistance right here, and I scaled it. I scaled it off. I definitely sold too early. This trended the whole day.
Right.
So, I took it off a little bit early, but that's the importance of taking some size, taking some off into strength, and moving your stop loss up as like a trailing stop to pay yourself as the stock's trending up. That's really important. But you can see this had a nice history of every day after that day. This was Monday, Tuesday, Wednesday, Thursday, Friday. It would have that dip and rip. You see that?
Yeah, I see it. So, like, in that situation, are you looking like, because you said you didn't trade the dip?
I'm looking at the first candle to make so after the sell-off, I'm looking at the next candle to show green.
Mm-hmm.
But I want to see it bounce at a whole number and then have somewhere to risk off of. So like in this example, it pulled back all the way down to 250, 53.
Right.
So I would have got in at 250, 55, 56, and then risked 250, 48, a little bit under that whole number. So not only am I looking for longs, I'm looking to see where I can risk off of, and so I can have a proper risk/reward ratio.
Yeah.
Because if I didn't have anything to like identify where I'm going to stop out at, this could have just kept selling off.
And you don't want to sell.
Yeah. So another example, we can look at this day. It pulled back. First 5-minute candle pulled back all the way up to 257. So in this example, maybe I could. The next 5-minute candle pulled all the way down to 256.36. So let's say I got in on this second 5-minute candle that pulled back. Say I got in right at like 256.50. Well, I could have risked,
underneath the low of the candle.
Yes, underneath of the low of the candle, or I could have risked underneath if you want to have a larger stop loss, underneath the whole number at 256. So maybe like 255.98 or something. So you have to identify where you're going to risk, what you're willing to risk. So when the trade goes against you, or if the trade goes against you, there's no surprises.
Right. I definitely like that setup a lot. I don't take too many bounces like that, but it's definitely something I'm going to want to add to my playbook.
Yeah, that's another thing we want to talk about is like mastering one strategy. Like there's a whole bunch, but it's nice to branch off into other strategies. But when you're first starting out, you don't want to be like trying all these different strategies
You want
because
to
you're
just
gonna
do stuff you're comfortable with.
do something with you're comfortable with because you don't want to be overwhelmed.
Right. When I first learned, I was always like, I would just study the chart patterns. You know what I mean?
Yeah,
I would just go on TOS like in my free time and just look at the chart from the day and then draw patterns on it and to like understand and recognize patterns. You know what I mean? Like getting really good at pattern recognition is important when you're just starting out too because reading the chart is like 90% of the game, and then the other part is psychology.
yep. Alrighty. Uh, anything else you want to end off the video?
We're making a new YouTube video, so check that out.
Oh well, this is gonna be the YouTube video, but
Yeah, make sure you check it out.
alrighty, that's it.